The Florida housing market in 2023 is experiencing a complex set of dynamics. First, hold on to your hats because we've got some breaking news. Despite all the twists and turns, guess what happened? As of September 2023, there hadn't been a significant drop in home prices across the state. Also, there are some rumors that the Florida housing market is going to crash soon. Well, to find out the reality, we need to dig deep into this matter and the Florida market situation. Let's go! Before getting into detail, we need to know, is the housing market going to crash? No, because there are still more buyers than sellers, a significant price drop is unlikely. According to a chief economist at a title insurance company, Mark Fleming, there's just generally not enough supply. There are more people than available housing, it's just economics. According to Dave Lineager, founder of a real estate company, many would-be purchasers have been waiting for mortgage rates to fall, but if rates do fall, new buyers may flood the market, driving up property prices. You've got an entire generation of pent-up demand, adds Lineager. We're in this fascinating situation where there's a lot of demand but insufficient inventory. When interest rates begin to fall, it will be another boom and bust cycle. And you know what? From 2005 to 2007, the US housing market appeared exuberant before collapsing with terrible effects. When the real estate bubble burst, the world economy saw its worst slump since the Great Depression. The recent housing bubble has been threatened by rising mortgage rates, and there is the possibility of a recession in the future. Due to this, bank rates' most recent expert survey puts the odds at 46%. Purchasers and homeowners are wondering when the housing market will crash. However, housing analysts agree that it will not crash. While prices may decrease, they will not fall as precipitously as they did during the Great Recession. The personal balance sheets of homeowners are stronger today than they were 15 years ago, which is a clear distinction between now and then. The average homeowner with a mortgage has excellent credit, a substantial amount of home equity, and a fixed-rate mortgage locked in at a rate less than 5%. In fact, according to recent Redfin research, 82.4% of all current homeowners are locked in at rates less than 5%. Furthermore, builders remember the Great Recession all too well and have been careful in their construction pace. As a result, there is a persistent lack of available properties for sale. We simply don't have enough inventory. Now the question is, will some markets experience price declines? Yes! However, with no supply, a repeat of a 30% price decrease is highly unlikely. Well, now we explore the captivating world of existing home prices in the Florida housing market. Buckle up because we're about to uncover some intriguing trends that will leave you amazed. Economists have long predicted that the housing market will eventually cool as home values succumb to the effects of their own success. Following a year-over-year fall in February, the first in more than a decade, the median sale price of a single-family house increased again in October with a 3.4% annual gain, according to NAR. This is the fourth month in a row of year-over-year growth. You'll be thrilled to hear this. Experts are predicting that home prices will hold strong in the coming months. While the housing market is cooling, this slowdown does not appear to be typical of real estate downturns. Despite high prices, the actual volume of home sales has dropped, as have inventories of available properties. Homeowners who locked in 3% mortgage rates a few years ago are hesitating to sell, and who can blame them with recent rates reaching 8%? Causing the supply of properties for sale to tighten even further. As a result, the correction will be nothing like the complete collapse of property prices during the Great Recession, when certain housing areas saw values plummet by half. We will not have a repeat of the 2008 to 2012 housing market crash. Yun stated in a September statement, "There are neither risky subprime mortgages that could implode nor the combination of a massive oversupply and overproduction of homes." According to Ken H. Johnson, a housing economist at Florida Atlantic University, the housing market is being driven in two opposing ways. We think we are in for a period of relatively flat housing price performance around the country as high mortgage rates put downward pressure on prices, while significant demand from household formation and an inventory shortage place upward pressure, he added. For the time being, these forces should balance each other out. Well, there are 5 reasons there will be no housing market crash. Let's discuss them. Number 1, inventories are still very low. The National Association of Realtors reports that there was a 3.6-month supply of properties for sale in October. That figure was a meager 1.7-month supply in early 2022. This persistent scarcity of goods explains why many purchasers are still forced to bid up prices. It also suggests that the supply and demand relationship will not permit a price crash in the near future. Number 2. Builders didn't build quickly enough to meet demand. Home builders took a significant step back after the previous catastrophe, and they never fully recovered to pre-2007 levels. There is no way for them to buy land and obtain regulatory clearances rapidly enough to meet demand. While they are building as much as they can, a repetition of the overbuilding of 15 years ago appears improbable. The fundamental reason for the price increase is increased demand and a lack of supply, said Greg McBride, Bankrate's top financial analyst. As builders bring more available homes to market, more homeowners decide to sell, and prospective buyers are priced out of the market. Supply and demand can rebalance. It will not happen overnight. Number 3. Demographic trends are creating new buyers. The changing demographic picture is not only transforming but also revolutionizing the home buying process. A powerful convergence of factors is driving an insatiable need for homes on numerous fronts. During the pandemic's turmoil, a considerable number of American homeowners had an epiphany. There's a dire need for larger spaces, which is fueled by the growing popularity of remote work. This seismic shift is exacerbated by the rise of millennials, a massive force entering their peak purchasing years. They are altering the real estate sector with their distinct set of preferences and goals, igniting a surge of innovation and transformation. Simultaneously, the expanding Hispanic demographic is emerging as a serious force in the home ownership arena, with their desires aligning with the broader property ownership zeitgeist. The convergence of these dynamics creates a lively tableau of a real estate market in perpetual change, where the interaction of changing lifestyles and altering demographics not only fuels demand, but also spawns new narratives about what a home means in a modern setting. As we traverse this kaleidoscope of influences, the prospect of home ownership becomes more than just a transaction. It becomes a significant chapter in our society's unfolding tale. Number 4. Lending standards remain strict. In 2007, liar loans in which applicants were not required to provide documentation of their income were prevalent. Lenders were willing to lend to almost anyone, regardless of credit background or down payment size. Today, lenders have high expectations for borrowers, and those who acquire a mortgage almost always have great credit. According to the Federal Reserve Bank of New York, the median credit score for new mortgage customers in the second quarter of 2023 was a remarkable 770. If lending standards loosen and we go back to the Wild West days of 2004 to 2006, then that is a whole different animal, McBride said. If we start to see prices being bid up by the artificial buying power of loose lending standards, that's when we worry about a crash. Number 5. Foreclosure activity is muted. Millions of foreclosures flooded the housing market in the years following the housing crash, depressing prices. That's not the case now, as most homeowners have a comfortable equity cushion in their homes. Lenders weren't filing default notices during the height of the pandemic, pushing foreclosures to record lows in 2020. And while there has been an uptick in foreclosures since then, it's nothing like it was. The current property prices in the Florida housing market are an enticing blend of stability, growth, and optimistic possibilities. This market provides a great chance for savvy judgments, whether you're a buyer, seller, or investor. That's it for today's video. If you like this video, make sure to subscribe to Motion Finance and hit the subscribe button. We will see you in our next video very soon.